Let's see. All right, and we are live. All right. Not sure if anybody's watching yet, but if you are, welcome. This is going to take the place of our regular monthly Bayou Real Estate Investor Networking meeting. We're going to have our guest, Mr. Tim Blanchard, speaking in a little bit. We're going to go through our regular normal business first. And if you can see the crawler across the bottom of the screen, I'd appreciate it if you go to that link and fill out the sign-in sheet. That way, any information that we go over in the course of this presentation, we can email that to you at the end of the meeting, sometime within the next 24 hours. If you've got questions, just go ahead and comment, and we will either address them during the presentation or at the end of the presentation. Let's see. So first, some ground rules. Go to the URL, sign up for the sign-in sheet, and we'll distribute the information. Comment to ask a question. Most likely answer them at the end, but we may stop in the middle of the presentation and answer them right here in the middle. If you're not already a member of the group, the Green BP group on Facebook, go ahead and join up. And if you want to subscribe to future notifications, go ahead and email me at jjrallc@gmail.com to subscribe to future notifications. All right. Our agenda, so we've already kind of started with that. We've done introductions. We'll do a quick deal time. If anybody has any deals, and then we'll get on to our main presentation. All right, quick tip. KPIs, that stands for Key Performance Indicators. What that means is that you pick a metric that indicates how your business is doing. It's kind of like when you go to the doctor, he checks your blood pressure, your pulse. If you're diabetic, he checks your blood sugar, that type of stuff. And that tells the doctor how your health is doing. Well, KPI is kind of like blood pressure and blood sugar and and heart rate for your business. What you want to do is you want to track those metrics and measure them against your past performance, and you use those indicators to tweak your operations to drive your business in the direction you want it to go. All right. Right. Insurance. I'm an affiliate for National Real Estate Insurance Group. They are specifically for real estate investors. You can go to the link there, find out all about the different types of policies they hold. The cool thing about them that I like is that they put all of your properties on a single monthly schedule, and they don't basically you only pay by the month, and you can move properties on and off of your schedule. There's no earned premiums. You only pay for what you're using. You don't buy a policy for a full year and then get your premium prorated. They earn their premium every month. So anyways, if you're interested in insurance or looking to possibly change your insurance, check these guys out. The other thing that's nice as a real estate investor is that on each property they provide $1 million of liability coverage. All right. Anybody out there have any deals? Deals available? Give us profit potential if it's buy and hold or flip, address, repair estimate, financing, deadline to close, or if you've got any needs, whether it's property, contractor, insurance lender, or agent. And if we don't get any comments, then we're going to assume that you don't have any deals or needs. And I guess at this point, we're going fairly quickly, and we're going to turn it over to Mr. Tim Blanchard. All right, Tim.
All right. So I forwarded Clint an Adobe Spark slideshow earlier that he's going to share with the whole group. Oh, there it is now. But he'll be able to share the link as well. This is actually provided by Riverland Finance, which is a wholesale company, but it does give a real good indicator of what happened with the Fed rate and mortgage interest rates over the course of the last 40 days that have dramatically reshaped mortgages and mortgage lending. The reason why I want to talk to you guys about mortgage lending, especially in the buy and flip situation, is the people that are buying your homes are going to be affected by this. Okay, so this is important information to know. So if we look at the next screen, of course, it gives you a situation of how COVID-19 came into play, the time frames, and all of that stuff. Just kind of giving a quick overview of the coronavirus and what's indicators for it. But I want to specifically go to the next screen that has mortgage impact. Okay, when you look at mortgage impact, it kind of gives you an idea or a background of what affects mortgage rates and how these different indicators are going to change over time and influx your rates. Okay, so basically what happened with the coronavirus, and look, you can go through these slides and read each one. I think it'd be better for me to just talk casually and give you a synopsis of what happened. So basically, when the scare hit with the coronavirus and the economic shutdown, then big investors bailed on the stock market, and they wanted to put their money into a much safer place, which is the mortgage bonds, which is mortgage-backed securities, which essentially is the 10-year treasury bond. Okay, so whenever investors put their money into that bond, it forces the bond yield to go down. So how much that bond pays goes down. That directly affects mortgage interest rates because those are the mortgage-backed securities for a 30-year fixed. So when the yield goes down, the mortgage rates go down. So at the beginning of March, we had a dramatic dip in that yield and mortgage rates went way down. What that did was, and you can go to the next slide, Clint. I know I'm talking kind of generalities here, but what that did, that created a situation of supply shortage. So you had all of these people wanting mortgages, but the people that bought the mortgage-backed securities, well, they didn't necessarily want to buy all those mortgages, not especially with the lower yield. So you had a situation where, okay, well, now the banks are going to start spreading and we're going to get a bounce in the rates. So they hit bottom and then they bounced up. Okay, and it was a very short period of time that they were so low that I've been doing this for 22 years. I've never seen them that low. I have a lady, I'll give you an example. I have a lady in my office that's doing a 15-year fixed refinance right now at 2.3. So that's about as low as I've ever seen any rate, period. She happened to lock it on that day and got that incredible rate. Well, as soon as this happens and these mortgage lenders are no longer have a place to sell their mortgages, well, they're going to start spreading that rate to slow down the applications coming in. So now all of a sudden, that's where the rate whiplash comes into play. And that's why the rates went down, and then boom, they bounce right back up. There's other indicators, there's other things that happen, especially with economic slowdown. There's the fear of people losing their jobs. People are losing their jobs, of them making their mortgage payments, that's also contributed to this very, very volatile market. It's as volatile as I've ever seen mortgage rates. And this is on a daily basis. This is not on a weekly basis or anything like that. And I'll give you some real life indicators or examples. So rates come out about 10 o'clock in the morning every morning from the lenders. And during any given week, we might get 1, 2, or maybe 3 rate corrections during the day during that whole week. Well, right now in this environment, we're getting 3 to 5 rate corrections every day. So basically what that's doing is that's saying if you call and get a rate and you like it, lock it in immediately, because in an hour, we won't know if we can get that same rate. So that's how volatile it is. So how does this affect you guys? I mean, this is all fine and dandy. This is what's happened over the last couple of weeks or month or so. The Fed stepped in, bought some mortgage-backed security to try to stabilize the market. Of course, the stock market's been up and down. If anybody's paid attention, it's yo-yoing all over the place, and that essentially affects mortgage-backed securities. But how does it affect your buyers? How does it affect the people buying your homes? Well, what's happened is these lenders, they're getting what we call margin calls, which means that the people that are buying these mortgages are calling in the mortgages from their side, and they're losing money based off of the low interest rates and the credit scores that follow those rates, especially on the lower spectrum of the credit scores. So many lenders, and luckily enough, I have 8 or 9 lenders that I can choose from being a broker, which really saves our skin in this environment, because we'll have some lenders that will no longer do any government loans lower than a 660 credit score. We have some lenders that won't go below 640. The lowest one that I have will go to a 620. Now, keep in mind, before this started, I can go all the way down to a 580 credit score. So they have tightened up and they have said, we're not doing these loans. We're not doing the lower credit score loans. I have one lender that's a nationwide lender, one of the largest lenders in the country. They're not doing any new mortgages right now at all. They have totally shut off the faucet. So this is a very, very scary environment for, say, for instance, for you guys doing a flip, then all of a sudden, okay, I got to find someone to buy my home. You might have someone that qualified for a mortgage 30 days ago or 45 days ago. Now they're having a tough time getting financing. Maybe they need to work on their credit score. Maybe they're scared about the impacts on their job. So there's a few different factors here that are making mortgage lending scary for the short term. And I want to emphasize the short term, because as soon as, and we all seeing the different reports on the coronavirus situation and how it's affecting everybody, but as soon as the coronavirus situation stabilizes and people go back to work and the economy goes back to work, it goes back into play, then this whole industry is going to flip on a dime and go back to where it was. Every lender I've talked to, every representative I've talked to has said the same thing, that the underlying principles are all there, economic-wise, for the economy, for mortgage lending, for the companies. I mean, all of this stuff's there. It's just that this is a scary glitch in our situation. And I'm real happy to be talking to you guys today about this, because not only am I a lender and I'm dealing with the mortgage lending side of it, but I'm also coming to you as an owner of a company. See, I own Allegiance Home Lending along with my business partner. I also own a property management company where I have renters and we're doing flips. So I'm in the same boat as you guys. So I kind of, if it's okay, Clint, I'd like to kind of switch gears maybe off of the mortgages and how people are going to buy your homes, and maybe give a little bit of insight and what I've had to deal with as being a business owner And as far as being a property management owner and dealing with SBA and some of these gap loans, basically, is what they essentially are. So from what, again, it's a little harder if you're not in tune with financing to deal with SBA. And there's been some frustrations from borrowers in trying to fill out the application for the SBA loan. It's a little easier on my end because not only am I a business owner, but I'm used to doing mortgages. I've been doing them for 22 years. I know how to fill out a loan application. So it makes it a little easier on my end. But they just installed a new streamlined process on the SBA.gov website. And that allows you to apply for a mortgage, a loan, a low interest rate loan that it's called an economic disaster recovery loan. And it's specifically for the coronavirus. Okay. And I think it's at 3.75, and I think it's a 20-year fixed. And I'm pretty sure the way they determine how much money they'll lend you is they'll take your monthly expenses and they're going to multiply that times a number of months. So February to June at this point, so 5 months. So say, for instance, if your expenses are $5,000 a month, then you can get a $25,000 loan to help mitigate your losses in the meantime. And you can pay back at 20-year fixed at 3.75. It's a heck of a deal. Okay. So that's one portion of it. There's also a situation where there's the payroll protection program or that loan that's going through the local banks. I spoke to a couple of the guys that I know at the local banks, my banker at SLB, and I have another personal banker at Synergy, and they're getting guidance on this. And this is a forgivable loan, and it's to help make payroll. So if you have situations where you have employees that you have to pay, this is a loan that you can get through the local banks through SBA. And if you show receipts that you used it for payroll, then now you can have that loan forgiven. And that's what I'm understanding from my bankers. Okay. So the economic disaster relief, it's pretty simple to fill out. I filled out the one for my property management company yesterday that on the new Streamlined application. Is basically what's my revenue for last year, what's my reoccurring expenses from last year, and it basically goes from January 31st and 12 months prior. They figure out how much money you made, basically what your normal expenses are, and they also want to know for property managers how much lost rent do you have or do you expect with people that are renting your homes and not being able to make their rent payment because they lost their job. So this is maybe a way to recover some lost rents. It may be a way to help pay some of your expenses, your monthly expenses. I mean, heck, if we own property, we got to pay insurance, we got to pay utilities, we have these expenses every month. So this can help bridge the gap and kind of get you guys from point A to point B until everything starts rolling again. So I hope, again, I'm not. If y'all have any questions, let me know. But I hope some of this information has been helpful. I can talk some more about some different subjects if you'd like. If you have any questions, just let me know. But the big things I wanted to talk about was, again, the mortgages and how people buying your homes are going to fare in the next 30 to 60 days and buying your flips. And then also to try to possibly get some relief on any payroll shortages or any expenses that you can help mitigate any losses from lack of rent or lack of somebody buying your home on a flip. You could possibly get some money to offset that from SBA, which stands for Small Business Administration.
All right. If anybody's got any questions, just type them in the comments and we'll address them right here.
I don't see any.
Yeah, I think there's like a 20-second or 10-second delay, so 20-second round trip. But even so, I'm only seeing one comment. Okay. If there's no questions, then
Did you find that information useful, Clint?
definitely,
Okay.
definitely, I really appreciate that.
Okay, well, appreciate it. Like I said, it's been a real trying time being a mortgage lender in this environment. I've never seen it like this. And I said I've been doing this for 22 years.
Yeah, this is. I don't think anybody outside of maybe oh, we've got a couple of questions here. All right, so I understand the SBA will help cover lost rent.
That was a question directly on the SBA application. What is your lost rent due to the coronavirus? They want to know an amount for that. So if they're asking that specific question, then my understanding is SBA will loan you the money or possibly forgive that money if you have lost rents due to someone losing their job over the coronavirus.
Okay. And that was Melina asking that. And Kevin Leeret's asking, is using a line of credit different than an SBA loan?
Absolutely. An SBA loan is a loan directly from Small Business Administration. So a line of credit at the local bank, that's what I'm assuming, a local bank or credit union or whatever bank you're using, is directly from that administration, where SBA is a government-backed loan. It's basically like if a borrower used FHA or VA or rural development to get their mortgage to buy a house, you're using this as a small business owner to access money that's guaranteed by the federal government. So SBA is a totally different ball of wax. They normally issue very low interest rate loans to small business owners to help them in certain situations. I'll give you a prime example of a common use of an SBA loan is if you're in a federal disaster area, such as from a tornado or a hurricane, then they'll issue SBA loans to help rebuild homes, or a road home program as part of the SBA. Those types of things are SBA loans. But in this situation, they're trying to help business owners. You probably heard the administration talking about passing this huge $2.2 trillion bill, and they had $350 billion set aside for small business loans. This is what this is for. This is to help mitigate losses for small business owners, which covers a wide swath of different types of businesses. But specifically, the way it helps out with real estate investors is it helps mitigate lost rent, and it helps mitigate it and lends you money so that you can make expenses every month for the 5 months that the coronavirus was in effect. So this is a very, very good opportunity for you to help mitigate some losses.
Cool. And Kevin says that his line of credit is with a local bank.
Correct. And check with your banker. They're going to have information on the payroll protection loan. But if you want to try to get the economic disaster relief loan, then you need to go to sba.gov. And there's a streamer right across the top that says COVID-19 disaster relief loan application. And just fill out the 6-page application. And it's pretty simple questions. Just have your accounting stuff handy, and you should be able to get through it. And this is taking into effect that you're either a sole proprietor, LLC, whatever the case may be, okay? That you're not just running this through a personal Schedule E on your tax return. So, of course, you want to make sure that you're showing it that way.
right, hang on. I'm trying to do something here outside of my. I'm working on 2 computers and a phone.
Yeah, I see one that says, when I looked at the applying for the SBA coronavirus loan, it said that it's not available if I'm able to borrow elsewhere. That's not the indicator I got. Like I said, I filled it out yesterday, and I'm able to apply at other banks. It never gave me that indicator. It said, you're applying for this loan for disaster relief, economic disaster relief. You go ahead and apply. Now, did they answer you and say no? Is that what happened? Or is it somewhere on the application? While he's typing, also a tidbit is they're also making available a $10,000 advance for the loan, whether you deny it or not, and that may be forgivable as long as you can show that it goes to offset payroll. But a lot of these deals aren't payroll. On the instructions, on the application, okay, yeah, and I was instructed differently. As you know, basically, if you're able to borrow this money from your local bank, I mean, that's fine, but this is a disaster relief deal if you have lost funds. So your local bank may not be able to give you that money, may not be able to do a new loan for you. You have to walk into that situation thinking, well, I'm not able to get that loan at my local bank simply because I have lost rents. I have disaster situation. Okay, I'm losing money every month. I can tell you right now, bankers are not in business to lend you money if you're losing money from month to month. They're not going to do it. So you're going to look at that application and say, hey, you know what? My bank's not going to give me this money. I need to apply for this loan. So I'm going to tell you right now, I would apply for it. Let them tell you no. Okay. I would not just take it and take for granted that they're going to deny you for the loan.
Yeah, the old adage, always ask for forgiveness rather than permission.
That's correct. And I say it's my understanding that since I'm losing money month after month, that my local bank won't lend me the money to help make ends meet. So,
good deal. Does anybody else have any questions?
Let me ask you, was that on the full application from SBA that was there, say, a week ago, or did you check yesterday on the new Streamlined application? Because the new Streamlined application didn't have any of that verbiage in there.
And that may be part of it. I saw somebody that was filling it out. They said it took them 2.5 hours to fill out the application. So I'm figuring it's the old one.
That's the old one. Yeah, 3 days ago. So that wasn't on there. My wife was pulling out her hair trying to figure out that one because it had detailed questionnaires about liabilities and debts and assets and all of this stuff. That new Streamline application, it's 6 pages. It's about 10 questions on each page. I filled it out in 5 minutes yesterday. It's ridiculously easy. And they're not asking, or at the point of your application, they're not asking for this information. I think they want to get the applications in, and then they're going to request that from you via email later on, what they want to see. So it should be a little bit easier now, hopefully. When you're dealing with the government, a lot of times it's easy.
Who knows?
Yeah. But I mean, hey, look, it's a good thing. They're trying. You know, you just got to know what you apply for it. I'd say anybody apply for it. I mean, let them tell you no.
Yeah. Yep. That's the best approach.
Mm-hmm.
All right. Let's see. I'm trying to think if there's anything else. So, you getting any indicators on when things are going to settle down, or is everything kind of just up in the air until they get the coronavirus situation settled?
When you see people start going back to work in general and demand increases, and look, everybody around here is worried about oil prices. I mean, let's be honest, that's what drives this whole area. So at $20 a barrel, there's going to be a lot of unemployed people. Okay.
Yeah.
But I think once demand hits the street again, people are driving again, planes are flying again, cruise ships need fuel. I mean, all of this stuff takes place. I think the demand for the oil is going to go back up. The price is going to shoot back up. It's probably going to double within a couple of weeks or maybe less. We hope anyway. And that way, a lot of people go back to work. And really and I listen to the business news pretty much every day, and they're all basically saying that this thing's going to turn on a dime as soon as people go back to work, because this is a health-related situation. There's no underlying problems with the economy. I mean, when the mortgage meltdown happened in 2008, there was a lot of underlying situations that caused those mortgages to fail and the housing market to go under or go down. There's none of that right now. A shameless plug, if you ever want to find out what happened in 2008 with the mortgage industry crash, I would recommend watching a movie called The Big Short. Pretty much describes in detail what happened for that mortgage industry to fail. And it's pretty interesting. I don't know if you've seen it, but it's a pretty good show.
Yeah, I hadn't watched it yet.
I recommend doing it. It's good.
Okay, cool. All right. Well, I appreciate you coming on and talking with us, Tim. Great information.
Mm-hmm.
For everybody listening and everybody that's going to listen to the replay, appreciate y'all joining us. We got some more questions. All right. So question is, Mari's a new investor, wanting to know if you'd recommend that we wait to buy a property. She's been hearing a lot of things that say not to invest now.
Okay, and I don't want to be a doomsayer or anything like that. I do have quite a few real estate friends that right now are working in the industry, and they deal a lot with foreclosures, in which that's our prime things to buy, to invest, to fix and then flip, or fix and then hold. Okay, so they say there are very few repos right now. That market's dried up because people are making their mortgage payments. Okay, keep in mind that if this thing stretches out for a month or 2 months, then you may have a lot of repossessions coming up in 4 to 6 months. Okay, so that may be a better time to purchase or look at purchasing. If you have a property though right now that you're interested in and you can make a profit on it, especially if it's going to take you 60 to 90 days to fix it, then I'm fairly certain the mortgage industry will come back and you'll have buyers for that home within 90 days. So I'm not saying being skittish right now. It's a bold move to invest money when people are wanting to hold on to money right now, being in this situation. But a lot of time, fortune shines on the bold. So I wouldn't be scared of it either if you have the money to do it, simply because in 90 days, the mortgage industry is going to be ready to go, and you're going to have buyers wanting to buy your home, especially if you're looking to fix and flip. And then, of course, at the same token, it's always a renter's market. People got to live somewhere. So, it's one of those situations where, if you're investing, real estate's still not a bad investment. Well, I wish I had a couple of $100,000 a few weeks ago to invest in the stock market, because, Stevie Wonder could have seen some of these stocks that were going to bounce back that quickly. I mean, it was easy to see what was going to happen. A blind person could have seen that casino stocks or Boeing or some of the other stocks were going to rapidly rebound, and that's what happened. You could have doubled your money in 10 days. So again, I mean, use some measure, but I wouldn't shy away from it.
And you may get the opportunity if this goes any longer, because it may have another down leg coming the longer this holds out.
Yep.
Cool. Any other questions? And then while people are formulating their questions, Melina says she likes the format of this online meeting while we're quarantined. I appreciate that. This is my first time ever doing a live stream for a meeting like this, so this is kind of cool. I was able to find this application that helped me pull all this together, so that helps. Also, I was thinking about doing something a little more frequently than once a month. Thinking about having, now I'm gonna forget the guy's name. Private Lender Podcast, Keith Baker, come in next week and talk with us. So look for that. He's over in Houston. He does, he basically does this podcast about private lending and everything. I figure he might be a good guest to bring in and talk to the group. You're welcome to join us for that and see what he has to say.
Clint, I would like to also mention if I'll keep in touch with you via text or email and let you know when things start to turn back around for the mortgage industry. And I can just maybe do a quick drop in and let you guys know that, hey, look, it's coming back, and because we'll probably be on the front lines and know very quickly when it starts to come back.
Well, and I'll tell you what, with this format, it won't take much to get together for 5-10 minutes and talk about it like this. All right. Let's see. Which one of us are you talking to? Tim is the guy that's done the majority of the presentation, and I'm Clint. I'm the host.
So Clint has my name and my phone number and my company name, which is Allegiance Home Lending. I am a residential mortgage lender here in Houma. Me and my business partner, Mark LaPlantis, own the company, and I've been mortgage lending for 22 years. Clint, go ahead and post my cell phone number. You can give me a call on my cell phone, text me. He also has my email address. I'm sure you can post that as well. And any information you guys want to know about, feel free to give me a call or text or email.
I'll tell you what, if you guys can see the crawler at the bottom of the screen, it's got an address. If you go and fill out the information on the sign-in sheet, I'm going to email out all the information and materials that we talked about here on the presentation.
He'll also send you the Adobe Spark plug that I had. That gives you a real good synopsis of what happened with mortgage rates over the last 30 days. And it'll give you a reference to where it gives you some background on what affects mortgage rates and why did the prime going to zero not make mortgage rates even lower. And that gives a good explanation of what happened.
Yeah. So I've got a question for you. Do you think that we're heading into negative interest rate territory? I know not for mortgages, but for the Fed rate?
I think that would be their next move. And just to give you a quick synopsis, so the Fed prime rate is the rate that they lend to banks so that the banks can turn around and lend that money out to other people. So the banks will add their their level of risk in the form of a number on top of that Fed prime rate. So like say, for instance, a line of credit against a collateral home might be 0 plus 2.5 on the prime. Well, at 0, your HELOC would be at 2.5. Okay, so that's just a quick answer, quick synopsis. If it's a negative rate, and it's very possible, then they would be basically paying the banks to take money from them to lend out. The whole reason why they would want to do that is to inject cash liquidity into the market. They want to make sure banks are putting out money to people, lending money to people, so that they have money to inject into the economy. So that's the only reason why the Fed would ever do something like that. I've never seen them cut a Fed rate so quickly as they did, a month ago. When they went from 1.5 to 0, well, they went to 0.25 at first, and then they cut the other quarter almost right away. So it's a 1.5 cut on the prime rate in a ridiculously short period of time. Usually they move in eighths or quarters, and that was just tremendous amount of cutting. And again, the point was to try to inject liquidity. So yeah, I think they may do that.
Scary times.
That's scary. So basically, the federal government be paying banks to take money off their hands to lend to people.
Wow.
Pretty crazy.
Yep. All right. Any more questions? Going once? Going twice? I forgot I had that slide in there.
Yeah, there you go. We're going to go there. Well, thank y'all for coming.
I appreciate y'all joining us. Like I said, I'd appreciate it if you'd sign the sign-in sheet. Go fill it out. That way I can email you all the stuff we talked about, links and contact info and all that good stuff. Book recommendations. Tell you what, I've got a book recommendation that I recommend to everybody. It's called The E-Myth Revisited by Michael Gerber. It's about systems and processes. It's probably the number one book that I recommend to everybody. It's about how to set up a business, an entrepreneurial business.
One book that I've always referenced over the years is The 1 Minute Manager, which goes over, I forget who wrote that, and it's not a very long read, but it's very good. It's about time prioritizing and how to manage your days when you're managing a company. So it's something that probably applies to everybody and even in everyday life. So I've recommended that one over the years.
Excellent. All right, our next regular meeting is going to be on the 5th of May. As I said a little while ago, we may have some other live events between now and then, depending on what we can line up. And appreciate you guys attending, and we'll see you next time. Thank you.
Thank you.